Mark Lackey is Executive VP at CHF Capital Markets, and he's here. Good to have you here. Good to have you here about palladium and silver.
Right.
We haven't covered either in a long time.
No, and that's one of the reasons, Pat, why we decided we'd combine them, because they are both precious metals, but they're precious metals with industrial uses as opposed to gold, which is far more of a precious metal. So historically, they tended to all move in the same direction. In the last few years, they somewhat diverged. Palladium, if we talk about that first, it's run up significantly in the last year and a half, from 600 up to about 770. And it's done that largely, Pat, because of the growth in catalytic converters. It used to be catalytic converters were found in Europe, and they were found in North America. The rest of the world didn't worry so much about NOx and SO2 and some of the other particulates. Well, when people started to get air that was not all that great, they recognized in places like China and India, we're going to start putting in catalytic converters, and they've been doing that in the last number of years. So the growth has been great because the auto sector continues to do well. I had to even revise up my Chinese numbers to 25 million for this year.
From?
I had it at 23.5,
Wow.
but we hit 22.5 here in January. So the growth in the auto sector is still very good in China. We may be seeing a few other sectors, Pat, that aren't as strong, but we're seeing it clearly in autos and trucks. And so the catalytic converter has been very strong. The other area for palladium that's been strong, Pat, has been jewelry, white gold, and of course it's been helped in India by the tariff that was put on by the Indian government on gold imports. Now some of that's been reduced, but still people moved to palladium and a lot of people haven't moved back. So between jewelry and catalytic converters are doing quite well. Some of the other areas of palladium is used in some of the more industrial uses, which we've seen slow down with the world economy. That's to be expected. But the other factor on palladium, Pat, is that there's not a whole lot of big growth in supply. Most palladium comes from South Africa and Russia, which have both had their issues in the last year or two.
Russia in particular.
Russia in particular. And depending on where you are in South Africa, some places you have the ability to get infrastructure, other places there's no power, and it's not necessarily the easiest place to do business. So palladium growth, I think, is more likely to occur in Canada and the United States over the next number of years.
Is there anything that could potentially destroy that demand on the automotive side? Another mineral or anything?
No, I think, Pat, that that there's really no substitute for palladium in the gasoline market. Platinum's used in the diesel market. So, yeah, that's not a real possibility. I think that the big key is going to be could there be a significant slowdown in the auto sector worldwide? It's possible, but it doesn't seem very likely given where I'm seeing the growth from places like India, where taxes have been cut, incomes are rising, and sales are up about 15% year over year. And as we pointed out before, in China these days, about 90 cars per 1,000 people. Here in North America, it's about 1 to 1. And in India, it's only 25 cars per 1,000 people. So there's a long way to go here in this middle class part of India to get more in the auto sector. Now they're going to have to improve their infrastructure, admittedly. But this Prime Minister, that's one of his key factors. So I think palladium price is $815 is what I've got at the end of this year, and $900 next year. So I see a pretty good move in the palladium price, largely because of the positive supply-demand conditions.
Okay, let's do silver then.
Well, on silver, Pat, last year we weren't quite as optimistic, and we were suggesting that, it might be a bumpy year, and in fact it turned out to be a bit worse than we thought. We got down to about $15.50. We did say we thought we'd start to recover this year, and now we're sitting around $18. So we're pretty happy with the move in silver, Pat, and I think we'll go up to about 20 at the end of this year, 23 next year. And I might be a bit light on this because on the demand side, it's still decent growth, particularly for laptops and for mobile phones and for keyboards. There's also been improved growth in the medical area, antibacterial areas for silver, and in things like water remediation, they're using a lot more silver. So demand's been good. It's not spectacular. But what's interesting, Pat, is on the supply side, we are seeing a slowdown here. And one reason is a lot of silver comes from copper byproduct. Well, what's happened to copper lately? We've seen that we were at 450 in 2011. We were at 330 about, 6 months ago. Now we're 250. Well, supply is starting to slow down in copper. The reaction's taking place. And of course, that means less silver. So I see silver only growing about 0.5% a year in the next few years on supply. And as a consequence, demand outstripping supply. Inventories go down, we see the prices therefore going up. And there are some people suggesting to me I'm still a little too conservative on the silver price, but I'm going to wait and see if copper actually does recover a little bit here in the near term.
Okay, now let's get to your picks then in this area. Wallbridge Mining.
Right. Now, we've mentioned this before, Pat. This is, in fact, a Palladium player. They said they'd have production last year. They've got production. They've got cash flow. I like the fact that they've got a partner who's putting in $5.5 million in exploration for them this year. So I see more potential for the company to grow its production as we go forward. They got a good management team. They got a good board. And so I guess the real question in my mind is, I'm a little bit surprised that the stock price keeps going sideways. It's almost as if people don't necessarily follow the palladium market, but yet you've got a real good opportunity here. And I should point out, Pat, that the two other junior palladium companies I liked in the last little while, Duluth Metals, which of course was partly owned by Wallbridge and ended up with $4 million in that takeover, and plus Marathon PGM, which was also taken out. So there's not a whole lot of small palladium players left. I think this is by far the best. And so I'm a little bit surprised, as I said, Pat, that this stock is doing what it's doing. It's reacting like a lot of the juniors that really don't have much going for it. This is a good jurisdiction. This Broken Hammer play has actually been better than I thought in Sudbury. So I see a lot of potential for movement. And they also own a company, a big position in Miocene, which is also a company that's doing quite well with operations in BC and the Caribbean. So don't quite comprehend this one in terms of its valuation, but on the other hand, markets do tend to get it right over time.
Yeah, or the company gets taken over.
Well, that's another distinct possibility, and I don't really have a good feel on what they might pay for it, because if you remember, I put Duluth on TV at 11 cents. It subsequently went down to 7 cents, but then within 3 months it was taken out at 45 cents. So you just never know in these situations how people are going to value these companies. But I know an undervalued company when I see one. This one's clearly undervalued, but we'll have to see what transpires. People like me keep pounding the table, and hopefully more and more people on the street and other investors will catch on to this story.
Okay. Next story, Exelon Silver.
Right.
It's obviously a silver play.
Here again, Pat, this company's had just some management additions announced actually today, which I think were very key. It's a producer. Cash costs just over $12 an ounce. So obviously at 18, they're doing fairly well. They've been increasing their production. They're in Mexico, which we feel if you're going to be in the silver mining business, now this is pure silver with some byproduct, but it's largely silver as opposed to most silver, which is a byproduct of copper. This is the other way around. They've got zinc and lead, which helps reduce the cost. But this is primarily a rich silver play, high grade, one of the low cost producers not only in Mexico but worldwide for a junior. So good leverage here, Pat, when you're looking at the price of silver. I want to be in the guys that have low costs, that have the big leverage, that can increase their production. And of course, the other advantage they've got, and I should have probably mentioned this with Wallbridge, who's got the advantage of the lower Canadian dollar. Everybody's selling in US dollars, Pat, so the peso has gone down as well. So there's some pretty significant margin improvement here, given the exchange rate issue. So very strong company, and I see this as one, again, you want to leverage yourself to one of the low-cost producers out there that's a mid-cap company. This is one of the places to be.
But you said they made some management changes.
Yeah, they added
today.
some
Why?
people.
Oh,
well, they added people that because they're expanding, Pat, they need some more technical expertise. They added, one of the local individuals out of Mexico, knows how to handle the water issues, knows how to handle technology. So I see technological improvements by adding an individual like this. I mean, somebody would have said, well, why didn't they add him sooner? Well, I think, with the silver price rising and the fact they're going to produce more, they're looking at ways to not only improve the environment, but improve their productive capacity so that they can even lower their costs of production. So, sometimes they negotiate with individuals. You never know how easy it is to get people on board and get them on, but they were able to bring people like that in, and they've made the announcements today. So I think that tells me they see silver prices going higher, they see production going higher, and they've added more technical expertise, which, that's good for the company.
And the last one is Great Panther.
Also, Pat, a fairly low-cost producer. Now, their costs are a little bit higher, more in the $15 range, but they're also Mexican.
So they were getting close to break even when silver dropped
that's
down.
right, Pat. They kept. In fact, what was interesting was, though, they clearly believed in what they were doing because they increased their silver production by 12% last year. So they obviously recognized they were going to do some things to try to lower those costs. They believed that the price of silver was going to go higher, and now that they're up at 18 $15. It's another good leverage play here, Pat. You never can say for sure, but I don't see us going back to $15 silver anytime soon. As I said, I see prices going higher. So I want to be leveraged. And again, this would be the next cheapest player that I looked at in Mexico. There's a number of guys around $20 who've kept producing and who are obviously losing money, but should be okay over time. But in this case, we're now in a very positive cash flow position, but also they've been increasing production. And I should point out they had some results in today, exceptionally high grade silver and gold intercepts that they hit. So again, Pat, we're looking at high grade, low cost producers in this kind of mid-cap area, because the big guys have already moved somewhat with the improvement in silver prices, but the mid-cap guys haven't so much, and I think this is the way to leverage yourself on a higher silver price.
Yeah, and it's not like they're mined out. Lots of
not
years
close,
left.
not close. In fact, if anything, both companies, I think, have some significant potential to increase their production. And I was impressed with what, Great Panther did last year, because, that's quite a significant improvement in production. You don't see too many other people in the mining business that had increases of that magnitude, particularly in silver and gold. So these guys are well positioned. And when I look around the whole universe, Pat, there's not as many guys that are as well positioned at these prices.
Yeah, indeed. Mark, great ideas.
Great to be here, Pat.
Thank you, Mark. Mark Lackey joining us, Executive Vice President at CHF Capital Markets.